Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to reintroduce Mr. Darren Sinden, the market commentator for Admiral Markets. Darren, how the devil are you, sir?
Very good, Moose.
Tricky week for the markets?
It has been, and obviously underlying everything that's gone on this week has been the question of Greece, which of course remains unresolved. Yeah. Maybe coming to an end game on Monday with this emergency Eurogroup meeting, but we know we've heard all that before, I think.
If we were still with our broker hats on, as we were many, many moons ago, giving investment advice and things, what positions would you have on this weekend? Or would you say, do you know what, what positions would you advise your clients? Do you think?
I don't think I'd try and be too directional. I think I'd try and have some kind of volatility play, straddle or a strangle in the options market, and there is going to be a move. We saw the US markets bounce high yesterday.
Well, Nasdaq hit a record high last night, didn't it?
But that in itself could be a warning sign, couldn't it? Because it didn't end very well 15 years ago. We reached the previous high. Now, I think it's very difficult to say. I think volatility is likely rather than pure directional play. So I think I want to try and be placed to capture that rather than trying to make too many bold directional calls.
Understood. Okay, well, let's go. We've got a number of slides set up today. First one today, data released over the European session. What's caught your attention this morning?
The first item was the UK public sector net borrowing requirement. Came in at 10.01 billion, so a slight typo there, versus the forecast of 10.05 billion, so less than expected. What that basically means is the government borrowed less money. Needed to borrow less money, which is the key. The prior figure had been 6.03 billion. This number does vary. What's key about this is that the reason it undershot the forecast is that revenue from income tax rose, which is a good sign for the economy as a whole, I would suggest, and for the government trying to balance its books. It's all marginal. Also slightly flattered, though, perhaps by a £284 million fine that was levied on Barclays, which knocked off a chunk of the borrowing. Anyway, the truth is we've had a month of the government, the new government now, and we need to see more about their spending plans, more about how they're going to cut both the deficit and the ultimate national debt. I think I'm right in saying that we've got a budget coming up in the next week or two from George Osborne, and that will perhaps, I think July the 8th might be the date, so perhaps a bit more on that. But that might give a bit more colour as to how they're going to proceed. Anyway, it's another positive number and another reason for people to be bullish of cable. Okay, in
terms of Germany?
German PPI, producer price numbers, a measure of inflation at factory gates, if you like. And basically it came in flat, month-on-month figure for May, no change. The forecast was for a gain of 0.2%, and the year-on-year figure came in lower, -1.3% versus a forecast of
-1.1%. Still disinflationary.
Yeah, absolutely.
Worries there.
No clear and hard and fast rule about inflation in the Eurozone at the moment. Then we just nip back to very early this morning with the Bank of Japan's Monetary Policy Committee statement. No change in terms of interest rates or QE policy there in Japan. There's no surprise to that. And Mr. Kuroda and his colleagues are very confident on inflation and the ongoing recovery. I have to say, I'm not of that mindset, and I still think there's a lot for Japan to prove to us, has to do before it can prove to us that it's turning round. So watch the data carefully. And then staying in Asia, Shanghai Composite Index, the broadest index in China, fell by 6.4% in a very nervy session, bringing it down to 13.3%
on the week. Well,
as you pointed out, it's had massive gains over the last year, 18 months. Nonetheless, that's a big move lower.
Understood. Okay, so let's move on to the movers in Europe this morning.
Okay, well, the one that's taken my eye first of all, ThyssenKrupp, big German steel and processed steel manufacturer. TKA GR, or Germany, is the ticker there. €24.17. They're up 3.64%, and Citigroup have come up with a very bullish note. They upgrade to buy. They say that they look cheap after a recent sell-off. They raised their target price to 28 euros, so still well above even that heightened price today. They say that if they get to 28 euros, they'll still only be on 12 times earnings, which is in line with the capital goods sector, and they flag the group's strong cash flow. So they're very bullish of those, and obviously the slightly weaker dollar is good for metals and metal associated stocks. And then ARM Holdings, we mentioned them yesterday in our M&A section as a potential beneficiary of the approach to Applied Microcircuits. They're up today to £11.10, up just over 2%. BNP Paribas reiterated its outperform recommendation on the stock. It's got a target price of £13 or 1,300 pence if you prefer. But I noticed as well that under the ticker RMH, where they trade in the US, they were 1% better overnight. So interesting, and probably one to to keep a close eye on, as we suggested yesterday.
Understood. Let's move on to M&A. Any rumours in Europe this morning?
Not so much Europe, but stories sort of drifting across the
US survey again.
Yeah. Conagra Foods very active yesterday, and traded up by nearly 7.5% after hours to $42. And the reason was that Janner Partners, quite a well-known hedge fund in the US, announced a 7.2% stake. Didn't have any holding at all in Conagra Foods.
So built that up in 6 months. Wow.
Well, in fact, in 3 months. It was end of March. It didn't have a single share. It's very much a confirmed activist hedge fund, and we'll see why it's interested in Conagra now. Conagra bought 3 years ago a business from a company called Railcorp, a own brand grocery business, paid about $5 billion for that, and that was an idea really that they wanted to attempt to spur growth at Conagra. And in fairness, there's been growing demand for own brand goods, and so it seemed like a good idea. However, the execution hasn't been particularly successful, and in fact Conagra's had to take several large write-downs, including one recently of about $1.3 billion, I believe. So Janner thinks that Railcorp deal was disastrous for Conagra. Conagra management's saying, well, we're disappointed by the Railcorp deal, but look, our stock's up 30% over the last 52 weeks, which is hardly to be sneezed at, although the S&P average is still around 46%.
Right.
Janner says we want seats on the board. They've lined up people that used to be at General Mills, at Nestle, people with lots of experience in the food business. They want to see a big change in strategy at Conagra. They want to realise shareholder value, and they say that despite the gains, the company is undervalued. So it's not necessarily a takeover play at the moment, but it's one where Janner are going to try and change the way that Conagra does business, and I imagine that would mean spinning off some businesses or trying to return money to shareholders in some form or another. Understood.
Okay, so let's take a look at the US data points to keep an eye on today.
It must be the
triple witching.
Yeah, but it must be the thinnest calendar that we've had since we started doing these shows today. So yes, it's triple witching. Americans like to call it quadruple witching. I can't get my head around that. But basically, for anyone who's in any doubt, it's the expiry of monthly and quarterly futures and options contracts today. We've already had the expiry in Europe, and many of the US contracts go out shortly after the US equity markets open, so there'll be flows and price changes to keep an eye on there. And then in terms of outright economic data, the best we can find today to talk about the Atlanta Fed Business Inflation Expectations Index, not one that we would regularly look at, but it's one of these regional Fed surveys. They canvass local businesses and worthy people to get their expectations of inflation over 1, 5 and 10-year terms, and all this data feeds into the big Fed matrix. And on the subject of the Fed, 2 Fed governors speaking today separately. First of all, John Williams speaking in San Francisco around 20 to 5 London time, and then Loretta Mester, she's the Cleveland Fed governor. She's speaking to around 5:15 London time in Pittsburgh. So there'll be something to keep your eye on at the close of the market.
Understood. And finally, let's wrap up with the US pre-market movers and some chart points.
Okay, well, the first pre-market mover is DreamWorks Animation, DWA, US the ticker there. Now, pre-market, they're up 10.1% at 29.93. What's interesting here is that, yes, Morgan Stanley have reiterated their buy recommendation, but I think there must be something else to...
10% seems extraordinary for a broker.
No, it can't be all down to the Morgan Stanley recommendation, and the stock's tested back to 52-week highs that it last touched on June the 8th. So there's something going on there. I don't know what, but I think I'd strongly recommend keeping an eye on that. And then one that's moved sharply to the downside, Healthways Inc. This is a business that provides sort of personal and group fitness plans. They announced last night they had to revise their guidance downward, citing slower sales in key projects, and the stock's fallen 26%. And when you look at that stock itself, you have to think that maybe it could fall a good deal further than that.
Understood. And chart points, these are the cash levels, aren't they, in terms of the indices?
They are indeed. So, well, not too much change today, but FTSE 66.90 now plays 67.66. There is a a decent bounce, or has been a decent bounce in the DAX, although it's fading as we were coming on here. But 11,121 now, plays 11,250. The upside level, they're just above the high of the day in the cash, so we want to see it get back through there if it's going to prove itself. Then the S&P 20 after yesterday's decent move, back up by 2,100, so 2110 plays 2135. And on the Dow, equally had a good day, 18,040 now versus 18,175. Currency-wise, the euro's given a little bit of ground against the dollar this morning, so 112.75 now. The downside level to watch, plays 113.40 on the upside. Similar story in Aussie US dollar, slightly tighter ranges here, 77.25 to the downside, plays 77.95 on the upside. Dollar yen edging higher, so 122.80 now the downside in dollar yen, and 123.76 the upside level. And cable, 158.40, they should say, sorry, plays 158.75.
Excellent. Okay, Darren Sinden, market commentator at Admiral Markets. Thank you very much for that this week. We'll see you bright and breezy and the Tip TV audience at 1 o'clock for the Wall Street crossover show on Monday. Have a very good weekend. Thank you, Darren.